They keep buying the dips. Even after that large gap, big buyers stepped in and bought that dip on Monday, which we expected due to our subcycle low, and smart money kept pushing even the entire last week to new all-time highs. But things changed a little bit at the latest all-time high on Friday. We switched positions, and I tell you what's happening. Let's hop into it. Plenty of new divergences kept building even last week. This here, for instance, is a weekly new highs versus new lows of stocks at the DAX. And as you can see, the last 3 weeks kept decreasing. There's a major decline of stocks, which actually participating in that latest rally with new highs. This chart got already shown last week. It's our subcycle chart in the 4-hour time frame. It's a setter indication, and I said on Monday we expect a subcycle low, which occurred right here. It was a bit lower. I said we most likely see a back test of that all-time high from the 24th of January. We gapped right below it. The futures went even deeper. They went actually all the way down here. However, we bought these dips. It took us a little while to realize that. And we got a few hundred points, and I actually sold all my long positions, my long-term long positions. They were in great profits, over 1,800 points. And then we actually started to short the market. 21,945 was the all-time high. 21,941 was an important level we have at the H1 time frame. I'm going to show you that any minute. What's important to say about this chart here is that gap here at 21,637. What's so special about it? We got that gap right here. We gapped up, we gapped down, and now we gapped up again. And we never saw that level during the cash. I wonder if we see that on Monday, because on Monday is a sub-cycle low due in the afternoon. This is the H1 time frame. 21,941 was just mentioned. That was the start of our resistance zone. It goes all the way up to 21,990. These were our last targets of these green sequences, which got triggered at 615 and 642. And it rejected here very nicely into the evening session after oscillating here for about 4 hours. We were building up a short position right here, and I'm actually planning to hold that a bit longer. 21,598. This level is already magnet for the bears, and I assume we run into that level on Monday for our sub-cycle low. Let's have a look at more divergences at the DAX. This is a correlation between the DAX and the volatility at the bottom here. And there's a double divergence now shown in purple and the red. The VDAX kept making higher lows while the index kept making new all-time highs one after another. There's that large red one as well. The VDAX kept contracting in its initial price before it initially popped up here last Monday, but it keeps making higher lows and it keeps staying at that point. Again, there is something under the surface, and that large gap we saw last Monday, in my point of view, it's just the beginning of something more to happen very, very soon. By the way, there's also a subcycle low due at the VDAX, which hit our cycle low perfectly on Friday. And also there was our topping indicator again at DAX. If you want to know more about that, you can join us at JCS-Charting.com. You can buy 1 out of 2 packages. I usually recommend to buy the advanced. You get my setups there and also live chat rooms. You can exchange your ideas with members and so on. And there is much more details and explanation of charts like that. And if you have watched my latest video update from last weekend, I mentioned that 21,824 needs to be hit first in order that DAX is allowed to do a larger correction to the downside. Here's at 21,824. We hit that on Thursday after we were running short here by 24 points the previous week. And remember that pop gun. At the beginning of January, it made 7 duplications to the upside, but it never pulled back. The pullback trigger is at 2,400, just below the December all-time high. This is my initial target for that correction. Also have an eye on that 50-day moving average. If these levels get busted, we most likely see a retest of the October all-time highs, and the 200-day moving average should come up here as well. So that is the next important zone. But first we need to reverse. We started that on Friday. And again, all our topping indicators are flashing. And after being a bull since Christmas, so actually since the middle of December, we switched. And we expect more selling pressure in the next couple of weeks. Alrighty, let's continue with the NASDAQ 100. It's a daily cash chart, and this one here is quite interesting. You have the all-time high here on the 16th of December, 22,133. Just a few days after we had that major sell-off, that was that Powell speech just before Christmas. And something really interesting happened there. Once you have a look at the smart money flow, it dropped a lot during that period here. Major players was just closing their positions and leaving the market. And since then, they never really came back. They haven't really participated in any of these bounces. Even that gap rally here, it keeps being sold over and over again. Here with that large gap, here again with another large gap. We had even that large or that bearish engulfing candle the previous Friday. Now Friday we saw the same thing. I assume, even that this looks like an accumulation phase, I assume we're going to see another low or significant low first. We have a subcycle low due in March, and I assume there has to be a deeper breath in order to run higher again at the NASDAQ. 2160 would be the next level bears need to see in order to run higher. Have a look also on that trend line here, that dashed line. Once that breaks, it could actually relieve a bit pressure to the downside. So far we have to say we are in the left-hand translation. NASDAQ keeps failing or keeps running short of these all-time highs out of December. Most of the time, whenever that happens, it took another breath to run higher. But that happened actually weeks after. A quick look at the H4 time frame of the NASDAQ. This is a JFD indication, so this is very close to the futures. It's still 30 to 40 points off the cash indication. And last week I came up with that trend line here connecting these two lows, and I said there's most likely to be a triangle pattern starting here, second touch, third, fourth. We are looking for the fifth. If that happens, we are going for a big buy. Well, we got that large gap, looked very promising, but NASDAQ stopped selling and went on to that buying side. We actually bought these lows. We were getting rid of those somewhere right here. I didn't really trust the move all the way up. However, we were going for a new triangle here. So the big question is, what is that? I still have my doubts that the thing is popping to the upside. Usually, these triangles, especially at NASDAQ, whenever it contracts in price, it likes to do it. It prepares a larger move. Most of the time in the direction of the trend. Now, if you consider that here as a new trend up, this triangle is a consolidation in the trend up, but I actually have my doubts about it. First, 21,903 got rejected very precisely twice. And since then, we never got really close to that level again. We always fell short. Once here, and then on that Friday, once again. Even we triggered 21,655. I still have my doubt that NASDAQ is playing that move up. Also, very interesting is these futures price indications, which were much, much lower than the cash reading. When we talk about 300 to 400 points, that previous Monday on the 27th, and also last Monday, that is here that opening candle, we were still 200 points short of the cash low on Monday. So all these indicators, smart money and so on, they don't really fit, and something is really odd here, and I still think NASDAQ is just not done with that low. 2307 has to be watched very carefully if this drop happens. Even if that green zone here is starting to break, you have to be very careful with the tech sector. There can be a larger drop still, and as shown in my previous daily chart, the beginning of March fits quite well because there's also one of our astro turning dates. We stay on the 4-hour time frame, but we switch the index. It is the SP500 JFD indication still, which is basically the same as the cash. And I came up with that slightly falling bullish flag channel. Usually that is a consolidation pattern within the trend. Let's say the trend started here on the 13th. It went all the way up to that new all-time high, and usually these trends or that first leg gets duplicated to the upside, and we would end up somewhere at 62.50. That's the theory so far. If it works, well, I also have my doubts here. Let's have a look what happened. Here's that all-time high. The S&P was the only one who made it at 61.27 on the 24th. Then we saw that large gap the previous Monday, not last week, that was the week prior. Futures were selling off a lot. All that news, they put, these tariffs on it. Or that was actually that DeepSeek stuff, Don't really want to comment on that. Then we went all the way up again. We were running short of that all-time high. By the way, the Dow Jones was also running short of the all-time high, created a very nice double top. And yeah, the S&P 500 did almost the same. And then we saw that next large gap to the downside. That tells us there's much more selling pressure to the downside. And again, smart money is the same behavior as NASDAQ. It's not participating on these rallies here. It's actually the other way around. They keep selling into these rallies. They keep selling their calls. By the way, we took our buying opportunities right here at 59.15. If you have the advanced package, you know about it. It actually occurred during the night. I put a few orders in here. We were selling them right here, and we also switched positions and went on the short side at the S&P 500. Now, why I'm getting so cautious? Again, a similar situation took place at the S&P 500 last week. That was Friday. We had a bearish engulfing candle even on the daily, and also on that Friday here. By the way, we were selling all our calls right into that strength. If there is more selling pressure coming up next week again, and we drop all the way down here, have an eye on 57.83. This is a very important level to be watched for the bears. And if I'm right, because the VIX is also running into a very important cycle low, there is a larger drop, but at some point, once the VIX is accelerating to the upside, the same what's happening at the VDAX, there will be larger moves, especially to the downside. Yeah, a quick look here at the daily VIX. What I just mentioned is that cycle low is due. We are right on that time frame. And as you see here, price is contracting. So I would be very cautious here. Once they release pressure, most of the time to the upside, once you see something like that, there will be larger moves at the index. A quick look at the Dow Jones and the Dow Transportations. Remember, we look at divergences here, and a completely different story at the Transportations. They kept selling, almost visited these lows here from December and beginning of January, while the Dow Jones made actually on that previous Friday on the 31st a very clean double top at the all-time high. While the Transportations were selling already, they found a new low on Monday, also the Dow Jones, but it was not anywhere near these lows out of January. It was diverging for positive divergence already here, but now it seems like the Transportations got more selling to do, while the Dow Jones Industrials are looking for a higher low. If that is the case, it's going to be another buying opportunity, and that could extend even into March. We were looking at gold last week already, very clean cycle pattern here, and that H4 subcycle chart. Next low is due by the end of next week. By the way, we triggered that green sequence 2835, very clean back test of that level on Thursday, and we got min targets now at 29.16 all the way to 29.49. They don't have to occur straight away. There might be a pullback of that sequence because that sequence is actually quite large. So we could pull back even much deeper before we are going for that green sequence. Last but not least, silver. A daily chart I was showing already that last week. That's falling bullish Wilbur wave wedge here in blue. The target line runs next week somewhere around 34.23. We were triggering that blue sequence here on Tuesday, and we were hitting the first min target exactly on the dot, 32.627. On Friday, and it reversed very sharply. By the way, once we hit these min targets, it's always at 127 and the 138. That's a second min target. You take chips off the table, and these have a very high probability of being hit. The 127 has a 94 probability of being hit, and even the 138 has still a 90%, or it's an 88% probability. Even the 161 got still 70%, but that's always our bonus target. That's about it. I hope you liked that update. You can leave me a thumb up or a nice comment, and I'll do more updates for my members tomorrow, especially on these indicators. And I see you live at the blog on Monday. And you're welcome to join, of course. We have a very nice growing community, live chat rooms. We have newbies, experienced traders, if they help each other. So yeah, join the team, and I see you guys on Monday. Happy weekend.